Hello and welcome to the Good, Bad and Ugly weekly review of 8th of December, the week ending 8th of December. And this week from the Weekend Investing Research Desk, you had all these stories going out, whether it was about, not having to judge a book by its cover in the sense that don't assume things just by hearsay or by the narrative. Look inside. 1,000 point monthly candle of Nifty. What does it mean? How has 1,000+ point candles of Nifty done in the past? How India is in a sweet spot versus the rest of the world? How the weightages in various indices are going up for India? Gold above $2,000, ready to go up big. In fact, it did during this week to 2150, but has retraced back, but still maintaining above $2,000. How have weekend investing like strategies performed in the US markets? A good study on that. Will markets go up as interest rates come down? Very, very key question, which most people will get it wrong. Please see this report. How valuations deceive you at times. A very important eye opener for those who only look at valuations for their investing. A roadmap for next 20 years for Indian markets. How a wall of liquidity from pension funds is coming to India, a report on that, and time for India to take off is coming, is a speculation that we do for this decade. So download the Weekend Investing app, get it on Google Play, get it on App Store, and you'll have all these stories right there on your fingertips. Nifty this week, remarkable gap up on 4th of December, and you had uh, continuous 3 days of run before which some sideways movement happened in the last 2 days. So a good 600 plus 700 point gain this week. On the weekly, we are seeing a breakaway gap up, runaway candle. Always a good sign to see these kind of moves on the Nifty. Benchmark indices, Nifty up 3.5%, now up 20.8% on the financial 24. Next is CNX 200, or sorry, Nifty Next 50, up 4.4% this week, up 34% in financial 24. CNX 200 up 3.6 this week, 26.1% financial 24. CNX 500 3.3%, 28.5 for the financial. Mid and small cap 400 and small cap 250 were a little laid back this week, 1.8 and 1.1% respectively, but the financial performance is amazing at 47 and 53%. Now you compare this with weekend investing strategies, and I'll start with MI20, clocked only 0.4%, but 85.8% on the board for financial 24. This is a blockbuster of a strategy. If you don't have it, do add it. And let me also say at this point of time that we are going to close down new subscriptions to MI20 very soon. So this is a breaking news that I'm giving on this Good, Bad and Ugly weekly review. It's not yet officially released to everybody. HNI Wealth Builder up 0.5%, up 67% for the year. MI25 up 0.6%, up 49% for the year. And MI35 up 1.3%, up 69% for the year are the mid and small cap strategies. Now, if you look at MI ATH2, it was up 3.7%, up 48.4%. ATH2 ATH was 3.6% up 24%. NNF10, my really good favorite strategy, 2.5% up this week, 49.5% for the year. India top 10, 2.3%, up 29.4% for financial year. MIMT all cap up 2%, up 54% for the financial year. MI30 up 40%, and MI Evergreen 41.4%. I think these are really good numbers coming from large cap strategies. If you look at the sectoral overview, energy sector was the blockbuster sector of the week, 7.9% on the clock, 39.8% for the financial year, followed by PSU banks and public sector enterprise stocks about 6%, followed by private banks, commodities, infra, metals, all doing quite well, up 3% and above. Real estate, autos, and consumption was 2.2 to 1.4%. FMCG pharma lost some ground, but just look at the real estate gains for financial 24, 91% on the real estate index, 63.8% on the public sector enterprise index. And you can see why public sector enterprise, energy, commodities, PSU banks are always in the green because they have been consistently performing. What is slipped in the last 10 days is real estate. What has slipped in the last 10 days is metals. But what is gaining is maybe public sector enterprise stocks, and PSU banks have rallied in the last week or 10 days. Pharma has been slipping in the last week or so. Consumption stocks right there. Autos also have slipped a little bit in the last few weeks. Spotlight is on 26% CAGR on a large cap strategy. So this is the makeup of MINNF10, which is a strategy based on the Nifty Next 50 Index. CAGR since 12th November when we started live on this strategy is 26.2%, and the underlying is 19%. It has done reasonably well for a large cap strategies. Total trades so far 94 trades, 51 winners, 43 losers. Average gain 32%, average loss 9%. So basically, we let the winners run and we cut the losers short. Biggest gainer 285%, biggest loser 36.8%. So the magic remains the same. These are the stocks that have done well in NNF10 since we started tracking it from 2011 onwards. And recently, the current uh, doubler in the strategy is HAL at 98.96%. Adani Enterprise was one of the premium gainers in this strategy from April 21, and we exited near September 22 on this when it graduated to Nifty 50, and post that it just collapsed here. HAL is the latest multi-bagger from NNF10, entry at 1151, currently holding at 2556. No rush to sell because there is no signal to sell. The summary for this strategy is it's a rotational strategy. Nifty Next 50 is the universe. 10 stocks rebalanced on a monthly basis. So no larger number of churn is there. Recommended capital 5 lakhs to 30 lakhs. The subscription is there, and the outlook is 4 to 5 years in my opinion. You can use this code NNF2X15 to avail a 15% discount on this strategy for this weekend, valid up to Monday, actually, not Sunday, valid up till 11th December 2023. This is all I have for this week's good, bad, and ugly review. I hope you have a great weekend, and I'll see you on Monday. Bye.